What if you could see market trends before most investors notice them? Not by guessing. Not by watching news all day. But with the help of AI tools that analyze millions of data points in seconds. Today, beginners are using artificial intelligence to spot investment opportunities faster than traditional investors. And in this video, you'll learn how these AI tools work, which ones people use, and how beginners can start using them today. For decades, predicting market trends required financial degrees, expensive advisors, hours of research. But today, AI can scan news, company earnings, social media sentiment, and market data instantly. The result? Smarter insights that help investors make better decisions faster. But before using AI for investing, there's something important beginners must understand. Problem section. Most beginners lose money in the market for one simple reason. They react too late. They buy when everyone is talking about a stock. They panic when the market drops. And they follow trends after they've already peaked. Why does this happen? Because humans struggle to process large amounts of information quickly. The stock market reacts to global news, company earnings, interest rates, economic data, investor sentiment. Thousands of signals influence prices every day. And no human can track them all. But AI can. What AI market prediction tools actually do? AI investing tools don't predict the future like magic. Instead, they analyze patterns from massive amounts of historical and real-time data. These tools use machine learning models to detect signals such as unusual trading activity, sentiment from financial news, macroeconomic trends, historical price behavior, volatility patterns. By analyzing these signals, AI identifies probable trends before they become obvious to the public. Think of it like this. A normal investor looks at a single chart. AI looks at thousands of charts, news headlines, and market indicators simultaneously. That speed advantage is what makes AI powerful. AI tools beginners are using to analyze markets. Let's look at some types of AI tools people use to analyze market trends. 1. AI market sentiment tools. Market sentiment often drives price movements. When investors feel optimistic, markets rise. When fear spreads, markets fall. AI tools scan thousands of news articles and social media posts to detect sentiment. They can show whether investors are becoming bullish or bearish on certain sectors. For example, if AI detects rising positive sentiment around clean energy stocks, it may indicate a growing trend before prices surge. 2. AI stock screeners. Traditional stock screeners filter companies based on numbers like revenue or earnings. AI screeners go much deeper. They analyze financial reports, growth projections, analyst ratings, price momentum. Then they rank stocks based on probability of strong performance. Instead of manually analyzing hundreds of companies, investors can quickly identify promising opportunities. 3. AI trend detection platforms. Some AI tools specialize in identifying emerging investment themes. For example, artificial intelligence technology, renewable energy, cybersecurity, automation. These tools analyze funding data, news trends, and company growth patterns. They help investors discover industries that could grow rapidly over the next decade. Many successful investors make money by identifying trends early. For AI portfolio analysis tools. AI is not only useful for finding investments. It also helps optimize portfolios. These tools analyze your investments and suggest ways to improve them by reducing risk, improving diversification, balancing sectors, optimizing long-term returns. For beginners, this can prevent common mistakes like putting too much money into one stock. 5. AI risk detection systems. Markets don't always move upward. Smart investors also monitor risk signals. AI tools track indicators such as market volatility, economic slowdown signals, unusual institutional selling. These warnings help investors prepare for possible downturns. Instead of reacting emotionally, investors can make calculated decisions. Simple real-life example. Let's imagine a beginner investor named Alex. Alex wants to invest in technology stocks but doesn't know where to start. Using an AI market analysis tool, Alex notices something interesting. The AI detects increasing positive sentiment around cloud computing companies. It also shows strong earnings growth and increasing institutional investment. Instead of randomly picking stocks, Alex decides to invest in a diversified tech ETF that includes cloud companies. Months later, the sector grows significantly. Did AI guarantee the outcome? No. But it helped Alex make a more informed decision based on data. And that's the real power of AI in investing. Important warning. AI tools are powerful, but they are not magic prediction machines. Markets remain unpredictable. AI should be used as a decision support system, not a replacement for critical thinking. Smart investors combine AI insights with long-term strategies, diversification, risk management, patience. Remember, the goal is not to predict every market move. The goal is to make smarter decisions over time. Key takeaway. The investors who succeed in the future will not necessarily be the smartest. They will be the ones who learn to use better tools. And artificial intelligence is quickly becoming one of the most powerful tools in modern investing. If you want to learn more about AI tools, smart investing strategies, and money systems used by successful investors, make sure to subscribe. Because the future of finance is not just about money. It's about using intelligence, both human and artificial.